Thanks for coming. I'm Ken Lindau. I am a CPA. I've been in practice about 45 years. Set up my first firm in '76. Learned a lot since I've been out of school, probably more than that I learned in school. What we're going to talk about today is two topics. The first being analytic metrics, okay? And businesses run on numbers, okay? If you want to, the simplest thing is I'm making a sale, I'm taking money to the bank and depositing them. That's a number. An expanding business offers the potential for numerous growth opportunities. What I want to do when I get in business, I want to grow this thing. I do not just want a job. If I wanted a job, I'd go and work for somebody. I want to create an income for me, and I want to create equity for me. Financial management involves all these activities. Enable a company to obtain capital for growth, allocate the resources effectively, maximizing the income potential of the business activity, and monitor those results through accounting documents. Like it or not, you need financial statements. You need them if you want to go into the bank and get a loan. The banker's going to say, I need a financial statement. You need them when you come to me and say, I want to do a tax return because I want to stay out of prison. I need numbers to put on that tax return. I do not pull those numbers out of the air. So, like it or not, if you're in business, you better get used to having regular financial statements and understanding those numbers, because that's where it's going to benefit you, and you are going to excel, increase that business. Numbers and strategies. Really, you need, this is a game. When I look at a business, I'm playing a real life game versus a board game. I'm playing a game with money and people. And I need to interpret what that business is telling me. Financial statements is a feedback. It's like walking into a doctor's office and saying my shoulder hurts or my side hurts. The numbers are telling me what the business is doing. There is no way that you're going to remember at the end on, say, November 30th, what you did or what that business did on November the 1st. The numbers will. The accounting statement, the accounting system will. It'll tell you exactly who bought something from you, how much they paid, what you paid to other people. That's all within the business. About analytics. Like I said, this is utilizing numbers as a feedback mechanism to the business, but I have to understand what they're telling me. And the other thing is, when you look at a financial statement, that's history. That's what I did. It's looking over my shoulder. What I need is, I need to use those numbers to look down the road. Where am I going? I am driving the car forward, not in reverse. So I need to set some targets of what kind of results I want. And keep driving towards those numbers as much as possible. I need to really measure every step I'm taking to see, am I meeting that target or am I not meeting that target? That is my management. So it's really, I am measuring my results. And it's objective. It's not subjective. So it's basically, the business is telling me, here's your report card. Like I said, I want that top line to grow every year, every month. One of my clients was in the appliance business, and I asked him how did he grow his business? Because they topped out at about currently about 150 million. And he said, basically, I looked at what I did last year in November, and I looked at that is the number I have to beat this year in November. And he did that successively over a lot of years. And that's how he grew his business. He's not a financial guy, sales guy. Profit. Basically, if I grow my top line business 100%, I need to grow my bottom line business 100+%. Because if I grow at 90%, that means I'm not efficient. I'm making more money, and I'm not doing as efficiently as I did the last time. So my goal is to grow the top line business X% and grow the bottom line business X+%, because I need efficiency in my operations. Operational control. You're in charge of your business. What it does, you're dictating it to it. So you have to assess the areas where I'm falling behind and where I can improve. This involves business systems and procedures. I don't want to work hard. I try not to. I was a CFO of an Inc. 500 company, and we grew at about 400% a year for 5 years. I was not sweating. I did not have a full-time job there. Basically, I ran out of work about 3 times during a 4-year stint and had to do other things within the company just to keep busy. That's having a system in place to handle your job. My job was CFO. I had someone doing the financial statements that would hand me the financial statements at the end of the month. They were right. So basically, working hard and sweating is not the real objective of being in business. It's to really do it as smoothly and effortlessly as possible. Yes?
What do you think your opinion is right now on the talent pool right now to get people that you have under you from when you had 4 years ago until now?
I think you really have to search for the right people. How do you find them? The way I find people is when I'm looking for somebody, I let everybody that I value as a producer know that I'm looking for someone, because those producers are not going to refer duds over to you. Okay, but and I find that works well, and you just have to put out what kind of qualities you're looking for. If you hire someone and they don't work out, you've got no one to blame but you, so you have to fix the problem. You have to leave them go. and go to the next one. One of the things that I do is I give psychological testing. Is basically I have someone that I know tell me what is best psychological makeup for this position or that position. I give the test. I view the test as compared with what I'm looking for, and that generally works. At least I've got a leg up on you have the same qualities that I'm looking for that meet this for this job. One of the things you have to assess when you're talking with someone is, are you trainable? Are you smart? Can I work with you? Okay. That's highly important. I mean, you're building a team, just like a sports team. Okay. I have to depend on you doing your end of the work. And when I do, and you have the right people, your job becomes effortlessly. So basically, you've got to assess that this is the right person. And you yourself have to spend enough time to train these people to do what needs to be done in the organization. Resolution of business problems. Basically, a problem is something that's screwed up in the organization. I got to fix that because it's costing me time and money. Both of those I really can't afford. So I want a smooth running organization as much as possible. Okay, now you've all got in your packets this sheet. Okay. And what this sheet entails is a financial statement. Because basically you have the financial statement that these numbers came from. Okay? So your job to create this result in analytics is to input this information. And so basically, at this situation, you're comparing 2001 or 2021 to 2022. Okay? Now, this happens to be for a 12-month period. But say I'm in August. Well, this would be August of this year, and this would be August of this 2022. So I have to compare apples to apples. And so basically, if this is August, I've only got 8 months over here, not 12. All of the green areas are where input is required. The white areas, leave them alone. So basically, that gives you all of the input information that is needed for the next step. It takes me maybe 10, 15 minutes at the most to input this sheet. But the benefits are, in my estimation, tremendous. Okay? Here's this, I have this on the screen, but basically you have the sheet in front of you, okay? This shows you the results. Now, what you as a business person needs to do is look at the red stuff. The red stuff is where you went wrong. In this column, it's a percentage difference on what I did a year ago compared with what I did right now. Did I improve or did I regress? So on the red items, I have to look at, Okay, the first one up here is my cost of sales. And I spent more. Can I explain that? Well, my sales increased. So, wouldn't it be reasonable that I would spend more to create those sales? Yeah. But I have to really, what I'm really looking for is basically my percentage increase up here versus my percentage increase down here. I have to balance the scales. Because basically I want to use this as an analytic tool for determining if my if I'm making progress or not, okay? And so basically, I want to make sure I'm going in the right area. Now, if you see on this sheet here, I increased sales 165%, but I increased my costs by 152%. So basically what that shows me is I became a little bit more efficient in producing those products. Now, if I'd have went 165% in sales and 200% in cost of sales, I didn't manage my operation well because my costs were going ahead of my sales. So basically, that's what I look for in that area. On the next one, profit from operations. Basically, if I increase my sales 165% over last year, I want to increase my profits a little bit more because basically I want an efficient operation. So basically, on this sheet, it's showing me that I produced 348% of better profits. I'm doing really well. Okay? And so when you go down the sheet, that's what you really look for in each one of these areas. And you ascertain, do I need to take action on the red items only? Leave the green stuff alone. I'm doing a good job in that area. The red items, I have to analyze, do I need to take corrective action? Okay, that compares last year versus this year. Now, if you go over to the column of goals, that's history over here. This is history. Over on that side, I'm going forward. Here's my goal column. That's what I'm saying I want to do this next year. Question is basically, am I making my goal or not? Okay, I go over to my results column over here. Again, okay, I've got a red on the cost of sales. I'm behind my goal. And over here it will produce, when these show up red, it will produce at least 3 items that say, this is a possible thing that you should fix. Okay? If you look down on the accounts receivable line, over onto the extreme right, it's showing you 3 options. Now, this is fine, but basically, maybe I should, like I said, increase possible. I need to increase sales. The sales increased, so my receivables increased automatically. So if I choose, I don't need to do anything I don't need to do anything on that. I may decide to revise my credit terms. Maybe some people are taking too long to pay. I need to maybe put some of these receivables out for collection.
Or sell them.
Or sell them. Do something with them. I need to squeeze ascertain what action, if any, do I need to take in my receivables area to improve that area. Because that's an asset there that's not in my bank. Okay, I've already done the work, sold the product or service. I just have to get paid now. Okay? But that's what this does. That's what all of these do. And this type of system can be tailored to a particular type of business. This is just general categorization of a normal business. So if certain areas need to be tailored in the system, it can be done. One of the things with my experience I question is if you're showing up with red here, getting more sophisticated probably is not going to be the best move to make right away. Get the normal stuff. I want to increase sales. I want to increase profits. I want to increase cash in my bank. And I don't want to buy equipment. How can I get my product produced without me going and buying another $100,000 machine? Because it takes cash from my bank. It increases my debt. So you're really, when you're running a business, you're an orchestra conductor. You're conducting marketing, production, finance, a lot of different areas. And you have to make the right decision as to that you're doing the right thing, and that this business is going to tell you if you're producing the right results. On the very bottom here, there's a box. It's called. It shows you. It produces what's called the Z formula, Z score. What that is, it's an indicator of bankruptcy. So you can see that this Z-score falls in the middle of failure or no problems. It was developed by Professor Altman back in the 80s. It was tested in real life on companies in the stock market. And it proved to be about an 85% predictor of bankruptcy. So it's really highly good indicator of, are you in trouble or are you not in trouble? A lot of the times the banks will use this as an evaluation of whether they're going to loan you money or not, along with whatever other indicators they look at. But this is a good indicator of a bankruptcy. I'm in the process of doing another booklet program on how to fix troubled companies. This analytics is to really focus in on, how do I grow my business? I'm hungry, I want to grow big and fast. How do I do it? I have to manage all of these things to get them in the green as much as possible. Now, if you look at one of the handouts I gave you is on the business. It's called Topsy Tail, $100 million business that was created by Tamara Ebanks down in Texas. She's quite a lady. Now, if you think it's hard to create a $100 million business, but I haven't seen any businesses $100 million or even less being run with 3 employees. If you can create $100 million of business and structure that business for running with 3 employees plus yourself, that is pretty magical. I haven't seen any guys do it. But what that article shows you is if somebody else did it, you can do it. It really, the monkey comes back to rest on your shoulders. Can you be as good as that person? That's one of the best articles I ran across years ago. Metrics like we went through a lot of this analysis and recommendations. Really, these are numbers that we have to dwell on to really come up with solutions, or we pass on it. My cost of goods sold is higher because my sales are higher. Okay? But I am in the ballpark. Is it shrinking compared with my sales increases? Yes. Okay. Basically, we're looking at the ratios, the change ratios on the various components. What I focus in on is the sales, cost of goods sales, but mostly I focus in on the sales plus the profit from operations. Am I doing better this year than I did last year? And am I meeting my goals? Basically, I set these goals. Am I meeting them or falling behind? If I'm falling behind, why? Again, basically, I'm here to produce sales and profits, whatever business you're in. Even if you're in a nonprofit business, your goal is to grow and be of more service to more people. Now, I have to make money. Whatever I'm doing, I have to get money from somewhere. I have to get, that's my production. So I have to produce that to be of service to more people. Some of the things that you really want to do is basically, how am I doing compared with a guy across the street? My industry metrics. Where do I fit? Am I ahead of them? Behind them? Again, we measure a prior year actual results and against my goals. Those are all things that we want to really do. We want to make sure that we're improving our operations and that our metrics are tailored to my business. The ones you have in front of you, they're general. Almost to every business. I want to increase revenue, I want to increase bottom line, and I want to increase cash. I want to decrease receivables. And it's basically, I have to determine how I can do that. Here's what I would really look at. I want to look at the projections of value over 1 to 5 years. What is my business going to be worth? You know, I'm looking to retire someday. So basically, what's the value of what I've been creating? The projections when you project a value for a business, it's generally projected off bottom line profits, not the sales. Because basically, what I'm taking home is on the bottom line, not the top line. So I'm looking at the bottom line, increasing that. I've got one client, we're at a 25% bottom line profit. We're looking at selling that to another company in LA. Their valuation methodology is very unscientific, and they don't quite agree with our valuation. So it's generally what you do on the bottom line is basically it runs anywhere from 3 to 5 times. So if I created a $100,000 profit this year, you multiply it times 3 or 5, that's what your business is worth, plus the hard assets. Now, if you've got a really fast-growing business, it might go up to 8. If you take that business and take it public, it might go up to 17. Okay? Basically, I said, once the financial statement numbers are entered in this, it goes on autopilot, producing this kind of sheet and giving you the possible things that you can really look at. If you look at on the edge, there's a little box on next to each one of these solutions. If you check that box, it will carry that solution over to the next portion that we're going to talk about, which is Turbo Growth Management. And that gets your management team involved in your assignment of who does what, who's responsible for fixing this area. And I, as a CPA, I'd like to shortcut this. I'd like to not have to do numbers. I haven't figured out how to not do numbers. And so basically, the benefits of doing these metrics far outweigh the time I have to put into them, because they tell me things about my business that I really should consider, but may not consider as just generally as an operating person. Okay, this is what somewhat our background is. Basically, we grew. I did turnarounds. They are harder. It's like turning around an elephant. Okay, it's very hard. You're dealing with existing culture, existing way things are done. We've started both large and small companies. It's a lot of fun, rewarding. We've talked with a lot of businesses over the years. The real trick there is, again, the individual, whether you want to listen or you don't want to listen. There's nothing I'm going to say that if you don't want to listen, you're not. We've had a number of people that just lose $1 million businesses because they will not listen. So there's nothing you can really do. When you start getting into double or triple digit revenue and profit growth, it starts being fun. And when you start getting into that area, it's not hard work. It starts, everybody is getting along in the team, because if they're not, you're not getting up there. If everyone is fighting in that organization, you are not getting into double or triple digit growth. I can guarantee you. Your operating costs start being under control. You've got systems and procedures in place to do your work. You have a top focused management team. You've developed that in that process. So it starts being a great deal of satisfaction when you get to that kind of level. If any of you are interested, be glad to talk to you. One of the benefits out of the next session is this feeds into this area, Turbo Growth Management Program. This is a program that I developed with the Inc. 500 company, because I didn't know what everyone else was doing in the business. I was the outsider, And so I developed a system to give me the feedback to what was going on in the system or the company, and it produced some other benefit, a lot of benefits that I never expected. So I know it really works. And in certain areas, I work where I guarantee results. Basically, if I don't get results, I don't get paid. So if any of you need any information, just give me a call. Like I said in the first, data equals information equals results. The goal is to turn this data into information that I can use to create a result. That's what we get paid for, results, not process. We don't get paid for how hard I'm working, how many hours, how much I'm sweating. It doesn't matter. How much I know, it doesn't really matter. This is basically what you get paid for is what I take to the bank. It's not a matter of greed, it's your report card. If you look at money as your report card for what I did, how good I was in business, that's it. My deposit slip going to the bank. This I ran across. Read this. I believe it's in your literature. It's this is business is the highest form of business because I'm managing stuff that is under my control with stuff that isn't under my control at all. The environment, the economy. I have to deal with that, but I have to deal with it for my business. So I have to I'm an orchestra conductor doing that. About the system, purpose of the system, I need to develop, if I'm in business, I need to develop a focused management team. If you have more than you've got to have that meeting and divvy up the duties and responsibilities and determine the problems I have that are holding me back. I need the team. Just like a sports team, no different. I need to achieve these objectives: profit, revenue, smooth operations, and everyone around that table has a specific area of responsibility that they need to take care of. My objective, again, is coming back, revenue growth, profit growth, operations. And initially, I need to focus in, I need to start my list of what are my problems in this business. What is holding me back from achieving my objective? On this business, you have to have a burning desire for growth. You have to commit and implement this system. You have to be motivated and ability to complete tasks. And what I have down here, this isn't optional. I will not even take anybody on ego, know-it-all attitude. Forget about it. I'm not even interested. You have to be totally committed and committed to your business. I want to create results. Bottom line results, top line results, smooth operation results, whatever, all of it. You have to be totally committed to do that. Otherwise, this will not work. It's a very hard attitude, but I have actually in the past, I have given this system away months at a time to very intellectual, very good people, various businesses, doctors, and I have failed because they knew it all. They knew better than me. I've got a $2 million medical business going belly up. Very smart guy, will not listen. I've got a real estate company that had unlimited funds from the Far East to do construction. They're going broke. They went broke, and they won't listen. I was even at a meeting where I was trying to mentor them on a weekly basis. I was told to be quiet. Just do the accounting. And remember, accounting is history. You're not going to make any money you've already deposited it in your bank account. You're not going to make another deposit from history. You're going to only make money and deposit from the future. We need to really focus on revenue growth. If you don't grow the top line, it's going to be hard to grow that bottom line. So it's basically, how do I increase growth? How do I structure double, triple-digit growth? How do I get on the Inc. 500 list? What did those businesses do that I can do? You have to really have a product or service that people want. It can't be a business that I think you should have. It doesn't matter. It's what you want. That's what I'm selling you. Again, you have to translate to that bottom line. There's no two ways about it. Basically, when I look at it, I tell people, don't focus in on trying to control the expenses on postage stamps. Your big areas are labor and facilities or rent. Now, rent, how much can I control it? I've committed to a lease. I'm locked into that money on the rent, so I can't control it. I can control my labor. I can have that production handled by somebody else or whatever. I can figure an easier way to do this job. But you have to analyze. I always look at the first 5 top things. Can I squeeze them? Can I change them some way to increase my results? Operation controls. Basically, I want a smooth running operation. Any problems I need to fix so it runs smooth. Nobody's going into a crisis that management has to refocus their attention to fix these things. One of the things I do is you've got a lot of problems. There's a couple elements I look at. How much is that problem costing me? How much, if I fix that problem, what will it cost? And if I fix that problem, what kind of benefits will it kick out? So some of my problems cost me a lot of money to fix, and I don't have it. So I drop down to number 2 or number 3 because they cost very little and they create a better benefit. So I'm really looking at a cost-benefit analysis on what problems I tackle first. And again, coming back, we need decent systems and procedures to implement and have the business run very, very smoothly. We're really in the business of developing, again, a management team that really carries out the job of the business. If you're a manager, I don't want to have to micromanage people to get a result. I want to, I'll give you a clear example. Today was the first time I walked into this room. My assistant, I told her roughly where I wanted to give a talk, arrange it, and she handled everything. Now, that made my life pretty easy because I only had to show up and give this talk. I didn't have to mess around with any of the logistics on how do we do this. So you really want that in an organization. My marketing person, who I just hired, after firing the prior one, facilitated all of you to show up. I didn't have to do anything. I want smooth running systems that I can focus in on what I need to do. There are jobs that you have that you look over your shoulder and you cannot find a person to do that job. That is your work. Until you find a person to take that job. I tell business people, your job is to figure out every year how to do less. To figure out who can do this job for me. Clear example for me, I do very little tax work. I even do less accounting work. Other people do that for me. I like doing taxes. It's fun, it's relaxing, challenging, but I don't have time. I've got other things to do. And I don't have people to do those jobs yet. So my job is to get me out of what I'm doing right now, even speaking. Again, I'm looking to grow the business. I want to know, what's my business? What am I doing? Am I going forward? You know, if you're an athlete, I want to be in the Super Bowl. I don't want to be the most losing team out there. Most of the businesses out there are losers. I once was at a conference with other CPAs and I got curious. What percentage of your clients listen to you and execute what you tell them to do to increase the value of their business or the profitability of the business? The highest percentage I got going around the table was 10%. And that's really bad because basically when I increase the value of somebody's business, they're better off, a lot better off. And I'm better off because I've got a good client, a happy client, one moving forward. Like I tell my clients, you are no good to me poor, you are only good to me rich. The richer you are, the better clients I have. And what you do with your money is up to you. But basically, you're a producer. You've got the brass ring. These are some of the areas that you really need to focus in on inventory. It's a big area in certain businesses, non-service businesses. Prioritizing of your problems and operating problems. You really want to detail what problems I have and then refocus to fix those. Yeah, I would recommend that if you want to really look at the cost. Do I really understand my costs of doing business? Can I minimize those costs? One of the things for this meeting, one of the things that I liked when I developed it was basically Monday morning at 10 o'clock, we had the meeting. I produced the agenda. I had what was said was going to be done that last week, and we went around the table. Now, it wasn't me or the owner who said you were going to do this. You said you were going to do it. So it was total accountability on your part. No one at the table wanted to go around and have their turn come up to say what they did. I didn't do anything. I just screwed around all week. I didn't hear anybody say that. Everybody executed, and what you find is once you start executing, you have very little to do. You have a system, whether it's production or marketing or finance, you have a system in place that automatically is handling things for you. Your operation, your area is running smooth. What we had is we had everyone that represented each of the functional areas at this meeting. It worked quite well. When you link this with the metrics analysis, and the reason I did the metrics linked to this was basically I am taking the human out of the equation as much as possible. I'm having the business tell me where it's sick and what the possible fixes are, and the human to carry it out. That, if you look back, that's what IBM is really doing with the supercomputer Watson in the medical area. It's reading every medical journal and every remedy and every outcome, patient outcome that it can get its hands on. So when you ask it a question, what is my solution for my heart condition, say, the computer will spit out an answer. Now you have a human that takes these possible solutions that this computer that read everything in the journals on this condition, take it to that doctor, give it to that doctor, who then really looks at this is good. I didn't think of this one, or this one I've tried in your condition and I've had these kind of problems. So you do have a human interplay, but you have a suggested solution to start with. It makes a lot of sense to me. Rather than relying on some individual who cannot read all of the information out there on whatever the topic is and say, I think we should do this. That's a guess. Again, here's our strength. For me, this is a real fun area when you're working with somebody that you can create results. When you're not working with somebody, and that's why I have my requirement down there, it's total frustration. I have seen too many businesses go bankrupt, broke, out of existence, just from individuals saying, I know more than the professionals or the systems or whatever. And I have not found it working. And that's why I really developed all of this system, is I need to create a result in a business that is double to triple digit growth. If we do our jobs, work together, that's what is achievable. If we really go head to head, you might as well just pack it up and leave, because it won't work. Because if you look at all of this, the same as a professional sports team, you've got all those guys out there, whether it's baseball, football, or basketball, they all have their individual job to do. And basically, I have to count on that guy over there to do his job, and that guy over there to do his job, so I can do my job. If they fail or they're duds, I'm in deep trouble. So basically, you really have to build a team, a well-managed, well-run team, where you as a top manager, you should not have a lot to do, because all the guys around the table are really, really smart in their particular area. Like, I don't know, I can read a lot of books on marketing, but I'm never going to be, I don't have the DNA bug or the DNA molecule in my body for marketing. It interests me, but I don't want to spend the time there. That's why I have a smart marketing person. That's what you need. Smart marketing, smart production. That's what it really works. Again, high growth is what our game is. Efficient operations. You want a continuing operation. Essentially, you want to be able to grow your operation such that you can go out on the street and hire a very competent manager to sit in your seat. You're on a beach down in the Caribbean with a cell phone sitting on the table, got a margarita there, reading a book. If that cell phone goes off, you have screwed up, because there's a problem. You should have had a system in place to fix that problem. You should have had a person there that handles that problem. So basically, if that cell phone never goes off, what I tell people is you fly back mid-December, say, meet the manager, meet the management, simply say, okay, you guys were paid your salary to do this job. You were paid $250,000 to make me $1 million a year. You didn't do that. You made me $1.5 million. For making me $1.5 million, you were paid $250,000 to make me $1 million. That's what you got the salary for. The bonus comes for the other $500,000. So basically, you compensate, you share with the people. On the other side of the hand, you really say, okay, what are you going to do for me this year? Well, they come back and say, we'll make you $1.5 million. We already did that. I will say, no, I am not happy with that. You already can do that. I want more. I want $2 million next year. So the situation, I didn't do 2 million, I did 2.5 million. That's what you're really looking for in execution of a business. is basically those people surprise you very pleasantly on the production results that they produce. If you're interested, be happy to talk with any of you, discuss your business situation. It's not a difficult system. It comes down to, in that book, Turbo Growth, it comes down to, our original form was an 8.5 by 11 form once a week. And I revised it to expand the lines a little bit. Now it comes down to about 2 or 3 8.5 by 11s once a week. That's it. The fee for the whole thing, it's basically setup fee. I've got it pegged at $5,000. Basically, I'll do it on a percentage basis, 2 ways. 10% of the profit. You made $10,000 last year, or $100,000 last year, and this year we're making $1 million. Okay, we did a good job together. My fee is $90,000. Okay, if you're not happy with 900,000 or 910,000, or is it 810,000? Then this program's probably not for you. The other way to do it is you just want us to come in and set up the fee, let's set up the program, and have you execute it yourself. However, whatever way you want, we do it on an hourly rate basis. Any questions? I answered everyone's question. What I find is this business is a lot of fun. If you just want the book, just send me a note. I'll make you a copy of the book for $50. But what I found is you have to be committed to implement the business. Otherwise, it won't work.